Pretty astonishing drop in profits for the fiscal year. A lot of that coming through from the rebound, really the astonishing rally we've seen in commodity prices. How sustainable are those gains, and would you expect them to continue into the current fiscal year, for instance?
Look, certainly if you look at our results over the last 12 months, where we increased cash flow by $1.3 billion to have total net cash of $1.9, there's no doubt there was an element that came through from stronger commodity prices. But for a number of our actual commodities, we also produced at record results. For example, Moselle in Mozambique, and also Hillside if you added back the 22 pots. So I think we've had a strong production year which have benefited by commodity prices at the same time. Now, in saying that, commodity prices today continue to hold strong, and I think that's predominantly fuelled by what we're seeing in China, where economic development's probably been stronger than we expected. At this stage, you don't see dramatic shifts in that over the next 12 months.
Graham, walk us through your views on coking coal, because I noticed on the conference call you had with analysts, you were talking about demand from China potentially weakening there.
Yeah, look, certainly coking coal's had a strong price over the last 12 to 18 months, certainly stronger than what we'd consider the long-term run average price. Part of that's been actually fuelled by what's going on in China in terms of supply becoming lower quality. Part of it's been driven by stronger steel demand than we probably expected. But at the same time, including our own operations, there have been a number of production challenges around the world, which has tightened, if you like, the supply into the marketplace. We would expect over the next 12 to 18 months you will see some of that steel production come off a little bit, but also you'd see some of the actual production that's not in the marketplace, such as our Illawarra mine, return back to the market as well.
Yeah, I was going to ask about that. I mean, the production challenges that you've had include the Illawarra production mines, but how quickly do you expect them to return to normal production once you restart that output next month?
Look, we have 10 operations at South32, of which 7 hit production guidance or their budget. 3 didn't: Energy Coal South Africa, Cannington in North Queensland, and Illawarra Metallurgical Coal is our biggest miss. Illawarra are in a staged approach now of restarting stage 1 of Appin Area 7. We expect to start that in September, and then from there we'll slowly start to ramp up in a safe and reliable way, and we'll update the market in October at our first quarterly production update.
The function MA-Go also shows your mergers and acquisitions. Recently, we had you buying a stake on Arizona Mining. We had heard about plans to buy Peabody's coal mine. Are you still seeking to add coking coal production through acquisitions?
Look, there are certainly commodities we do like. So we do like coking coal. We do like the base metals, in particular the copper, the zinc, the cobalt and the nickel. And we're looking, I guess, at 2 ways of how we increase our exposure. We will look at M&A opportunistically and where it creates value for our shareholders. The base metal side of the business, we're looking to actually get exposure via the drill bit, hence the deals we've done with Arizona, Trilogy, Huckleberry and Ozquest.
Yeah, Sherry brought up a good point on M&A there. You did agree in May to buy a stake in a zinc, lead and silver project in Arizona. I'm just wondering, do you think the outlook for project development has changed under Donald Trump in the U.S. for miners?
Look, I think it's always a difficult one because it's been 6 months of the presidency, and clearly there's been lots of noise around the presidency as well. I mean, I guess one of the advantages that Arizona Zinc has, a lot of its current tenements are already patented. So it's got a very different approval process versus an unpatented tenement. So we don't see environmental approvals as a big challenge for that deposit.
One other area of potential growth that you are highlighting is base metal demand coming from battery use. Battery use, clearly an interesting topic here in the Middle East, given the amount of oil production. Walk us through the kind of demand that you're seeing right now and how far you think it might grow.
Look, certainly from our perspective, we are seeing a growth, if you like, in demand for many of the commodities that are not only used in battery technology, but they're also more importantly used in the next stage of economic development, i.e. the consumption phase. And for us, that covers the stainless steel, such as nickel, some of our manganese, but also it certainly drives the demand for zinc, it drives the demand for silver, also copper. I mean, what we will see is nickel, I think, has an important role to play in battery technology, as will cobalt, so we'd expect their demand to grow over time. And also, they're not commodities which the world's abundant in terms of developments today.
Let's talk about aluminum. One of them, it's up 20% this year. The chart 7306 on the Bloomberg showing you that incredible rally in prices on the London Metal Exchange. You talked about weakening demand out of China from here, but could supply-side reforms coming out of the country offset that?
Look, from our perspective, steel we see probably easing slightly. Aluminium a little bit different because that does have a strong demand growth profile because that's one of the commodities used in the next stages of consumption, if you like. Certainly, if you like, in the last 10 years, we have seen in the aluminium space lots of cheap power available, lots of subsidies provided in China that's created more capacity than the actual world probably needed. I think what we are seeing now in both the alumina and aluminium space is a little bit of balance. I mean, obviously there's lots of noise around the environmental curtailments that are going in place, but we're also seeing for the first time, if you like, some of the costs of real production passing through in terms of power, transportation and labour, which we think will provide some support to both the alumina and aluminium price long term.
What about support for precious metals? I know that you produced silver as well. We've seen a great run-up from precious metals prices this year with the risk of inflation being there. Is that something that you're factoring in?
Look, gold isn't necessarily the commodity we go after, but we certainly have a large silver exposure through Cannington. Silver is always very difficult to predict because it is, if you like, a stay of wealth that's sort of not tied to the currencies, and it has a lot of fluctuations. So we continue to produce silver at Cannington, but to be honest, it's more of a byproduct. It's very attractive, but it's really hard to get into the fundamentals because it's so sentiment driven.
Graham, you know, the operating environment right now really looks pretty stellar given the run-up in base metal prices in particular. How are you taking advantage of that from a corporate perspective? This is a great opportunity to do maybe some strategic actions. What do you have in mind?
Look, I'd actually take a step back and look at a different perspective. You know, where we think we can be different at South32 is to actually be good allocators of capital, because traditionally our industry has not been great allocators of capital. And part of the trap historically has been falling into love with trying to double the size of the company through volume growth. What we're very focused on is how do we grow the TSR for our shareholders, the total shareholder returns. And in many cases, that will be about replenishing resources that we have. It will be about adding to the portfolio, but equally important, it's about returning excess cash back to our shareholders. And, you know, significantly over the last 12 months, you've seen South32 lift their returns to shareholders, which we think is an important part of building credibility for the future.
And Graham, just quickly, currency fluctuations, weakening dollar, Aussie continuing to strengthen. How's that affecting your business, and what's your outlook for the rest of the year?
Look, that's always an interesting one because obviously in our producer currencies, Australia and South Africa, it can have a big impact on cost curves, particularly metallurgical coal in Australia and manganese in South Africa. So, you know, that's something we watch closely. I mean, obviously it's in many cases things that are outside of our control. The most important thing that we can focus on is making sure that our business is resilient through different price scenarios and also different FX scenarios. And that's certainly an area that we're focused on a lot in the 12 months as we've been through that cost out journey.